What's up, investors? Welcome to another episode of the W.T.F report, bringing you the latest and greatest news that directly impact our financial markets and, more importantly, our portfolios. So this week we have new fresh record highs on all three indexes, and that is due to a new COVID treatment. We also have a major problem that Facebook is facing, and along with that we have a new purchaser of TikTok, maybe. Without further ado, my name is Ayan with AQ Markets, and you're watching the WTF report. Per usual, here's the overall market summary. We had the Dow Jones back to its record highs and a little bit beyond that at up 2%. We have the S&P 500 up 2.5%, and we have the NASDAQ up around 2.2%. Fresh record highs, and the reason behind that is because apparently there is a new COVID treatment which involves injecting someone else's plasma and blood that has the antibodies into someone else, hoping that their body accepts it. So the director of the FDA actually went and said how they're approving this kind of treatment. He was saying how great it was and how magical it was and how blah, blah, blah. So the markets were really, really loving this news. But then he went later and apologized because he kind of oversold it, said it a little bit too enthusiastically, and there's still a lot of research to show whether this is a really, really viable treatment or not just 1 in every 10 people it'll work with. Now, per usual, the airlines and the cruise lines rocketed on that information because whenever something positive about a COVID treatment comes out, these stocks are going to be the biggest recovery out of the general pool of stocks in the market right now. Additionally, the markets are also feeling a little bit more optimistic because the number of COVID cases is trending downwards. You know, in around June and July, we really peaked and we kind of flattened the curve, but the wrong way. We flattened it vertically. Now we're trending down. People are starting to get less infections, less spreading. Maybe people are actually listening and staying at home and wearing face masks. So we did it. Good job, guys. Still not over. Just joking. So let's keep that trend going. Along with this week's little rally, we also had some very, very interesting words from Jerome Powell, the Fed chair. And this had to do with inflation. As I mentioned, the Fed's biggest concerns going forward is they need to manage the inflation and they need to fix the unemployment numbers. Now, in regards to inflation, typically, the Fed has always had a target for inflation to be around a little bit less than 2%. Inflation is an interesting thing because too much is bad and too little is also bad. We need to have a healthy level, which is around 1% to 2%, depending on the situation. It's heavily debated, but let's just stick with that for now. Now, he said that he will not be averse to seeing inflation go even higher, as much as even 2.5 to 3% in that range. And that is a very, very interesting thing because inflation is one of the most biggest talked about subjects within the economy, and it impacts the stock market a lot, but it isn't as linear as high inflation is bad, low inflation is bad, and in between is good. It's much more complex than that. So without diving into the really complicated mechanisms of inflation and getting into topics that are heavily debated, here are some things that are typically true about inflation if we look back historically. High inflation typically means that gold prices go up. The reason for that is gold is a hedge against inflation, so people are more likely to buy it, which drives this price up. Along with that, bond prices also decrease because when you look at inflation, something that is pegged towards inflation is your real rate of return. Your real rate of return is when you take the return of an investment, you have to subtract out inflation. So if bonds are yielding around 4% and we have a 2% inflation rate, that means your real return is 2%. If it's that low because inflation's that high, people are no longer going to be interested in the bond market, so they might be a little bit more of a sell-off and people are going to stick more towards equities. But then on the contra side, if you have higher inflation, that means that the prices of things are going up, which means people will have less money to spend, which means there's less retail investors investing in the stock market, which means the demand goes down, which, again, like I mentioned, this stuff is very complicated. So when you're trying to understand inflation, it isn't as simple as a binary choice of up and down. There's a lot of variables that play into this. So next year is going to be quite a learning experience for a lot of investors, especially me in my young age. So let's stay tuned for that. Onwards to some stock-specific news, we have a new contender for TikTok. And it's not really a contender, it's more of like a tag team duo now. As I mentioned, Microsoft has been the frontline candidate for purchasing TikTok, and it turns out that Walmart, out of all companies, wants to do a deal with Microsoft to buy it together in unison as friends. And this is very interesting because you want to think, why would a grocery company want to buy a social media company? And it makes sense for two reasons. One, TikTok is profitable, or it at least has the potential to be very profitable. It has millions, if not almost, maybe even a billion now at this point, users, which shows an enormous potential for them to not only generate ad revenue, but Also, it's good marketing for them. If you are a company, you want to target your audience, but if you're going to make a lifelong audience, who do you want? You want the young people. Walmart is seeing that a lot of young people use TikTok. If you can make a lifelong customer out of someone who's 15, 16, 17 as opposed to someone that's 60 or 70, that shows a lot of long-term profit for them. That's their underlying logic behind that. They are bidding for the controlling part of TikTok, which encompasses the United States, Australia, and New Zealand. So it's not really the full TikTok, but that's still a large population of the company itself. And this valuation is looking to be around $30 to $40 billion. It's not really known what the equity split between Microsoft and Walmart is going to be, but I'm sure those details will come out soon enough since we're approaching that deadline, which is the middle of September. So as I mentioned in the beginning of the video, there is a big scary monster that is slowly coming closer and closer to Facebook to come and eat it. And no, it's not government regulation, and also no, it's not an antitrust probe. It is actually Apple's new iOS 14. And the reason behind that is because in this new software, the app of Facebook is not going to be allowed to collect IDFA numbers, which is a unique identifier to a device that Facebook collects in order to enhance the advertisement experience, as they say, aka they take your data and they use it to target ads. That's a more blunt way to say it. And have you ever been on your phone and you look up like gym equipment and then all of a sudden you scroll on Facebook and then you see millions of advertisements for gym equipment? That's basically what that is. Now, it is projected to decrease their overall ad revenue by 50% because if their ads aren't properly targeting the audience, why would companies be inclined to do that if they're not going to generate any sales from this? So this is something that's very interesting, and it could impact Facebook harshly. However, when you have two of the biggest companies and richest people in the world, typically they will talk it out and maybe they might change something up, who knows. However, along with that, as you can see by their chart, they are up over 7%, and the reason being is that they finally launched their e-commerce platform that I've been talking about since around May. And what this is going to allow, as I've mentioned in previous videos, it's going to allow small businesses to post items for sale, post their business, and have whatever products they have, and they will list it on Facebook, and Facebook's going to operate similar to Amazon or any other e-commerce site where they take certain profits or revenues of the company. And along with that, remember, as I mentioned before, that they're also doing Facebook Pay, which means that they're also going to charge you, most likely, the fees on processing credit cards and debit cards and all sorts of stuff like that. So they're up on that news. It's kind of neutralizing, and as I mentioned, it's not really certain that this iOS 14 is completely going to eradicate their 50% ad revenue, but I'm going to monitor that and I'll keep you guys updated. That does it for this week's WTF report. Per usual, if there's anything I missed, drop a comment below, let's talk about it. If there's anything you want to elaborate more, discuss more in this video, drop a comment. If you enjoyed the content, make sure to give it a thumbs up and like the video. And if you really enjoyed the content, or just do this anyway, don't forget to share this video and subscribe. Thank you guys so much. I'll see you guys next week.